Hey, good morning, everyone. Happy Tuesday. Hope everybody's having a good week so far. Look, right after this, we'll release our stock of the week. I think you'll enjoy this. It's another crypto associated stock like last week's Coinbase, right? Coinbase stock of the week last week. Since we released that pick, it's been a very good buying opportunity, right? You think about it when we were talking about it, it was what, 306, something like that. After we released it, came down below that 300, stayed there for a couple days, back over 300 today. There's your buying opportunity. Again, what I talk about, right? I talked about that with you guys yesterday. How many times have you as an investor or heard somebody as an investor go, I wish I could buy this cheaper. And then when something is cheaper, they say, well, it's too cheap. It's no good now. And they don't buy it, right? Coinbase, same thing, right? That's a great entry, guys. So pay attention with the stock of the weeks. We introduced Coinbase last week because we're going to start our crypto show on Friday, right? But in between, we wanted to show investors there is a way to get some good crypto exposure without exposing yourself to, one, the volatility of the coin itself, and two, the ability to manage that volatility by some traders, right? Which basically, when you buy a Riot or what is it, GTBC or something like that, you're betting not only on the volatility of the coins, you're betting on the ability of that fund to manage those coins. So we showed you a way with Coinbase to take that out, right? Instead of dealing with all that craziness, why not just invest based on how many people are trading, right? And Coinbase is a good one. So we got another one just like that. Same theme. It'll give you a little crypto exposure through your portfolio without really exposing yourself to that crazy volatility of the coin. You should be managing that in your crypto portfolio, okay? Not in your stock portfolio. Let's don't compound our problems, right? How about this stock market, guys? We had that big sell-off yesterday afternoon. It was kind of funny, right? We released yesterday's update, and maybe about 30 minutes later, that market just wah, wah, wah. And it was kind of interesting, right? A lot of people jumping ship, a lot of people panicking. Even Tommy Lee, right, from Strat Fund, came out and said, oh, I think there's something wrong with the fangs and stuff like that. Well, guess what? Tommy Lee's back on the bull today, and he came out and said that the something, I don't know. We'll take a look at it as we get into the update. And this market is petulant, right? This market is crazy volatile. It's petulant from almost, it's not even day to day anymore. It's almost hour to hour that it changes directions, right? This market is like my first marriage. You know what I mean? It's has no problem draining your wallet, and it changes moods about every 15 minutes. Anyways, no offense to anybody. Look, let's go take a look at the market together. Let's pop on over. Let me share screen here. All right, takes me a couple minutes. So you can see there, after being a blood red, right, earlier this morning, most of the morning, you can see that NASDAQ's just about 0.25% away from getting green. S&P's only down about 1%. The Dow is the one today. Remember the last couple of days, it was kind of interesting, right? It seemed like money was flowing out of the NASDAQ and out of those valuation stocks and into some of your more brick and mortar type stocks, and not so much brick and mortar, but your classic stocks, right? Dividends and things like that, stable balance sheets, what you probably should have in your portfolio regardless. But you saw that. Now it looks like it just all of a sudden everything just said, you know what? Oops, we're going to go back the other way. And you can see it kind of in the NASDAQ, right? The NASDAQ's actually having a better day of the three markets. The VIX is showing volatility, and it's showing serious volatility now. We talk about it, right? Anytime that thing gets over 20, this selling can get very dramatic. Remember that VIX is attached to the S&P 500, although it's a good indicator for the Dow. The NASDAQ can at times get out of sync with the VIX, and that's because it's tech heavy and it's based on a little bit different of format than the VIX. And you kind of see that today, right? The NASDAQ is recovering, but the Dow is still real deep red, and so is the S&P 500. A lot of this is what Tommy Lee from Strat Fund was talking about. Let me see if I can find that article while we're talking. It's kind of like what Tommy Lee was talking about, where the your FANG stocks look a little sickly. Microsoft, right, got hammered. I mean, it was making all-time highs or 52-week highs, all-time highs over the last week, right? And all of a sudden that went upside down. We know Apple's had some great earnings, especially the last two earnings, where they're talking about $1 billion in profit in a 3-month quarter. How can you sneeze at that? But yet people were selling the stock, right? We had some good, interesting earnings last night, and one of them was Palantir. We like Palantir, and we've been kind of waiting for this second earnings report since it hit the market, and we like that 49% revenue growth. We're not so concerned about the profitability early in this company's development. We know the product, the service that it offers is critical, and it's got great networking and great connections. So we want to just see that profit, that revenue growing, and then that'll bring the profit along with it. Kind of think Netflix in the early days, Amazon in the early days. I always remember, guys, one of the most famous things I remember any CEO saying was when Jeff Bezos one time was asked about Amazon early in the early days, and they were asked, how come your company doesn't make money? He says, look, I could turn this company profitable in a day, right? But it would ruin the plan going forward. And you see, with a plan going forward, brought you a lot more profits if you're a shareholder than that one earnings report would have. And that a lot of that theory is what you should do with a Palantir, right? You want to see that revenue growth stay strong and stay progressive, and that bottom line will come around with it on an early stage tech company like that. I mentioned Palantir. We bought a little bit this morning. Added it to some of the portfolios in case any of you are following around. And let's see how the rest of the day goes, guys. It's, like I said, with this market, it's so petulant right now, right? You just can't put a finger on it in the short term. You got to kind of keep at least a mid to long term view. That's why those cues we talked about, right? We opened up some cues in the morning yesterday, some calls. We're just sitting tight on those. We've got over a week on those contracts, and we'll see. It looks like the market's starting to recover, and we're only at 338 on the cues. We should be able to get a profit out of that if we're patient. Again, patience, right? It's easy to fall into that trap, right? The market's blood red, sell, sell, sell. But maybe stop and think about it. Maybe you should have been doing this morning what we were doing. What were we doing? We're adding little chips to every portfolio. You know what I mean? We're adding a little to this position. We're adding to this position. We added a couple more shares of Coinbase, right? I mean, like I always tell you guys, we don't recommend any stock of the weeks without buying it ourselves. Our first purchase on that was at 316. Well, we made some purchase under 300, and guess what? Now we got that average down to about 303. Not bad, right? Ready for the earnings on what's today? Tuesday, Wednesday, Thursday. So we'll see how it comes out in the earnings. This should be fun. It should be fun if nothing else. And if we're starting to roll into this bullish market with the NASDAQ, it should push it even higher. Other than that, there's not a whole lot of news going on right now, guys, except the usual back and forth in Washington about these big bills and stuff. You know what I mean? They've got a bill for everything right now. They've got the Build America bill. They've got they're trying to force feed stimulus again and things like that. They've got the election reform bill. You name it, they've got a bill for it right now. What passes and what doesn't is another question. As always in Washington, you never really know till that bill's signed, right? Other than that, guys, we've got that pipeline situation, right? They've identified the evildoers in that, and it was some dark side hackers, and I guess they're affiliated with the Russian government and stuff like that. Espionage is best, right? 6 months, just tune into Netflix. They'll have a little series on it, like everything else. But they're starting to resolve that manually. They've got a lot of that pipeline back open, a lot of that movement of oil, and they're talking about by the weekend maybe having the whole thing open, but first they want to make sure that ransomware, the malware from the ransomware, is completely removed before they do anything, which is the proper way to do it. Get that oil back flowing. If you got to do it manually, but make sure that that system is correct before you bring it back online. That's a smart thing to do, right? That's affecting gas prices. We've been talking about inflation, right, for the last, what is it, May, last 5 months. It's coming, and it's going to come hard, and it's going to come fast. This compounds it. Your inflation starts with your energy costs, right? How much does it cost to feed those pigs, right? In order to produce those pork bellies, in order to the pork chops and stuff like that. Same thing with the cattle, right? Same thing with chickens. We're having a chicken shortage right now, right? What happens when we have to mass produce quickly to catch up on chickens? And the price of raising a chicken and actually preparing it for the store gets more expensive, right? And then you've also got this gas situation now, which is accentuating this oil rise, which is causing a rise in your pump. And remember, we're in the second week of May right now, right? So we are just couple weeks away from summer when heavy travel comes. This could be a perfect storm coming up here. We never know. Like I said, we're still bullish though a little bit on the markets. We don't think that it's going to really take effect as far as a long-term sideways movement or a long-term sell down until we get a little bit more definitive view of how inflation and things are going. If this labor situation doesn't start to show some life this week, how will that affect things? And it's all dependent on the verbiage that comes from the Fed, right? If the Fed starts taking their foot off the pedal for stimulating and placating this market, that could be a very traumatic event. But it's not today. All right. Like I tell everybody, it's not today. So we're still long on the NASDAQ. Call us crazy, it's okay. You won't be the first, but let's just stick to our guns today. And that's what we did this morning. Like I said, we took little pokes to add to positions that we like. We've talked about it for the last couple months. We had set up this energy play for the beginning of summer and into the mid and end of summer, right? With your Suncors and your XLEs and ET. We love those companies right now. The Suncor trade's already profitable. That one goes all the way out to September. The XLE went a little bit profitable yesterday, but XLE got beat up a little bit this morning. It's right around break even. That one goes all the way out to July. And ET, until this morning, it looked like it was going to pump that $10 and go off to the races, but then we had that little flux with oil overnight, right? Oil since then has recovered. It's back over $65 a barrel, and it's very strong right now. Let me just take a look at the markets real quick here before I let you guys go. And don't forget, guys and girls, hopefully we've got a whole nice audience out there. Don't forget, see that NASDAQ's just down about 12 points now. So that thing's creeping up. Don't forget, right after this, I'll release the stock of the week, which will be crypto related, but it's a great way to enter. And this one's cheaper. I know Coinbase at $300 a share. Not every portfolio is able to, especially if you're a newer investor, you're starting to build your portfolio and stuff like that. I get it. Even to add one share of Coinbase, it'd just throw your diversification off. And you don't want to do that. You want your distribution to be correct in your percentages and stuff. So today we're going to give you one just like it. That's a great one going forward, but it's a lot cheaper. Okay. So this one should fit in any size portfolio. Remember, the last time we did an under $10 stock, it was ET. And we did that thing at when it was $7. The thing's pushing $10 now. So you guys check it out. Other than that, we'll be back in the morning with another update. Sorry for the late update today, but that first half of the session today in the market was really something we wanted to keep an eye on. And like I told you, we found some opportunities to add to our positions. Look, there's two things you can do when the market does what it did yesterday afternoon. Okay. One is you can sell everything, curl up in the fetal position with your thumb in the mouth. That's what you can do on one. Or you can be patient, you can be determined, and you can be like we were and just wait for your spot And that's when you cost average down. The old saying in the market, right? Buy when they sell when they buy low, sell high. How can you do it if you're buying high and you're buying when everybody's buying, right? Fear is good. Fear trade's good, especially in a chippy market like it is right now. And really, the basis, guys, if you think about it, why we didn't bite into that selling was there was nothing really that detrimental out there news wise. I mean, you hadn't seen rates, you hadn't seen the 10-year really shift. It's back over 1.6, but we've been higher than that a month ago, right? It kind of settled at that 1.5 and then it kind of just slowly fluctuated up to 1.6. That's very orderly growth, and that's okay. What you don't want to see is a hyper growth. You don't want to see parabolic moves, and that's probably what happened yesterday too with the Nasdaq for a lot. Is that there was a lot of movement out of your valuation stocks, you know what I mean, and into maybe bonds and stuff like that. A little bit of redistribution in a lot of portfolios. Who knows? Anyways, we'll try to make some money off of it. We'll try to help you make some money off of it. So, and the only way we can do that is if you watch the stock of the week. Anyways, guys, look, it's an interesting market day. We'll see how this shakes out. The last we got about an hour left in the market. Let me get you out that stock of the week. So in case you guys want to pick up some of those shares, we bought some this morning, and I'll kind of review that in the stock of the week. Okay. Other than that, we're still bullish on those Qs, and we're going to see how this plays out. We know from the past couple of weeks, right? Think about just last week, right? Remember on Monday, Janet Yellen came out and made that misquote about interest or inflation and stuff, and it just drove the market down, right? Remember, we set up that spider long and it just recoiled and came right back up, and then by Friday you were back down red again. It's a very petulant market, okay, guys, and just remember that it can change faces very quickly, so be on your toes. I don't know, or buy long like we do. Anyways, I'll see you guys in the stock of the week. And if not, for some reason, if you ignore that, I'll see you at tomorrow's update. Okay. You guys have a great Tuesday afternoon. Thank you for watching. Again, don't forget the stock of the week after this.